Hello and welcome to Pro Trader Strategies Market Commentary for April the 4th. It's a Wednesday. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a moment to read over this disclaimer. Basically, this is saying we're here to teach you different strategies and things of that nature, but everything we talk about is not a solicitation to buy or sell. And the reason why is because I don't know your risk parameters. I don't know what's in your portfolios. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. One thing, side note, yesterday was a bit of a calamity, for lack of a better phrase. The phrase I'm thinking of probably shouldn't necessarily be said. Had my computer acting up, lost a video card. Computer was not liking the video card I put in there, so a lot of things going a little bit wanky. I was able to trade a few things, so I'm going to talk about those. Haven't added anything today because I want to see what this market is actually going to do today. We started out really low in the equities and started rallying. I'll talk about some of those things here in a minute, some of those levers and pulleys that are making that happen. But let me get a couple of things out of the way with the economic data points because we're starting to get some good economic data here in the United States. Across the pond yesterday, one of the few things that we did get was some of their PMI numbers, but it wasn't really any of their major PMI numbers. It's not their flash. We're starting to get some of those flash PMI numbers, so you really didn't miss anything other than here in the United States. Then the United States had total vehicle sales came in at 17.5 million units, expected to be 16.9 million units. A lot of those U.S. manufacturers of cars were doing very well, especially GM, I think, was really knocking it out of the park with the new Acadia. So those numbers looking pretty darn good, actually. Then here in the, on today, let's say, we got across the pond, we got construction PMI out of Great Britain, came in at 47.0, expected to be 50.9. Now remember, anytime we're talking about these PMI, CPI numbers, anything below 50 is contraction in the economy. Anything above 50 is expansion. So we're seeing one of the first times one of these PMI numbers coming in below 50, and that was for Great Britain. Now for the European region, we got the CPI, which is the Consumer Price Index, flash estimate year over year came in at 1.4%, expected to be 1.4%, so that in line with expectations and looking pretty good. We got core CPI flash estimates coming in at 1%, expected to be 1.1%. It's a little bit of a miss there, but nothing to really write home about as far as I'm concerned. And then here in the United States, we got ADP non-farm payroll change, came in at 241,000 hires, expected to be 208,000. They also revised last month's number up from 235,000 to 245,000, so an extra 10,000 increase there, or actually 246,000. Then we also got our final services PMI came in at 54, expected to be right there at 54. ISM, non-manufacturing, which is the service sector PMI, came in at 58.8, expected to be 59, so pretty in line with expectations there. One thing to note with these PMI numbers here in the United States from the Institute of Supply Management, which is the ISM, that these prices paid are all over the place, and that has to do with the tariffs. So a lot of companies who were able to look forward and know that the pricing of those products, that those inputs into the manufacturing were going to be rather steady, are now in flux and making it very difficult for these purchasing managers going forward. They're not purchasing as far out as they would have beforehand. So that's going to be something to note. One thing with these tariffs is it's going to drive prices higher. That's artificially stimulating inflation in a sense. It's also a tax on the consumer, but I'm not a fan of tariffs at all whatsoever. And one thing that's a problem with these tariffs increasing and starting inflation is we're not seeing that show up in the wages. We're not getting wage inflation, which makes it difficult for the consumer to buy. If we had the wage inflation, then that could be offset a little bit, but we're not really seeing that on the wages side. So that could be a very difficult or sticky process for these tariffs. China keeps slapping on new ones, and we'll talk about that here more in a second. But factory orders came in at 1.2%, expected to be 1.7%, so slightly lower than expected there. We also finally got crude oil inventories came in at a drawdown of 4.6 million barrels. It was expected to be increase of 246,000 barrels. One thing to note there, production of oil is really starting to ramp up, and the refining of these products is really starting to pick up. So what does that say? We're back in that where the refiners have gone through those processes of shutting down the refinery, checking out all the processes, fixing them up, and putting them back online now. One thing to note with gasoline stocks fell by 1.1 million barrels, expected to be a drop of 1.3 million barrels. Distillate stockpiles rose by 537,000 barrels, expected to be a build of 1.1 million, or sorry, a drop of 1.1 million. And so gasoline, the oil getting transferred into gasoline, but we aren't using the gasoline and or distillates as much as we would expect. And then on to the overall markets, we've got crude oil. Did come off a little bit, but on some of that data point, we started getting a little bit of a pullback to getting right back to that 23 Fibonacci level and above the 50-day moving average. That's held for the past couple of days, the 50-day moving average being more of a support actually than even the 23 Fibonacci level. But now we are back above both of those. So the bulls are going to be holding on to that for dear life, I think, to try and get a little bit more of a bounce to the upside. Anything below that that's the 50-day moving average. Anything below that is going to be quite bearish. All right, on to the other markets. We've got gold coming off dramatically as the overall equities opened up really in negative territory. Dow was down at 600 points before the open, and the rest of the equities were really in the tanks. But what happened is we're talking about all these tariffs. China's going to start putting a tariff on soybeans, things of that nature. Brought even corn down. China is not ordering any corn right now, and really caused the overall grain room to really go into turmoil. But having said that, right around that time, we had Bullard come out and speak to some mainstream media and saying that he thinks that the Fed is going to be done raising rates for the rest of 2018, the way the markets are. So what happened here was gold started coming off, the equities just skyrocketed, and we've seen a major turnaround since the this morning's open, and a lot of the bearishness going in and around that. One thing to note, a couple of days ago, I talked about this on Monday, wasn't able to talk about it yesterday, but I was saying that this was starting to look like it could be a bit of a bottom here. We got confirmation to the upside. If you took that on a confirmation to the upside, you should be really seriously considering getting out of that. I would say go no lower than Monday's low. For your stop, I would be out. I probably would have been out on my confirmation, the upside. I would have been in probably early had I been trading this. But today, with this market move, I would probably be pulling the ripcord. VIX also was much higher this morning. Now, it's only up about a little over a point, but the overall markets, as the equities come up, the VIX is going to go down. So that's what we're seeing is those lever and pulleys right now. VIX coming off as the equities rebound quite dramatically. We've got the Dow Jones down 150 points, but as I said, when we opened up, it just fell out of bed. We were down over 500 points at one point, came down, tipped on the 50 Fibonacci level, and we have since rallied away, as you can see here, and trying to get above that 9-day moving average. That's going to be pretty big for the bulls. We could even see this really start to trend sideways right here at the 50, kind of consolidate, shake some of that fear out of the overall markets. NASDAQ in negative territory by about 13. It was actually at one point one of the few equities indices that was in positive territory, albeit for a short period of time there. But you can see went down to test the 200-day moving average, which is lining up with the 50 Fibonacci. Very strong support area, bounced away from that and rebounded. It's also got this volume node that's right there. So that all of those things is going to allow the market to kind of stay above that. There's a lot of pressure building up underneath there to try and hold up. E-mini S&Ps got back above the 50-day again yesterday. And Monday tested that 200-day moving average, kind of blew below that. Again today, same situation, but now we are back above that 50-day moving average. Like I said, all of these lines, if you look at just about any chart, it doesn't even matter if you're looking at an index or a regular stock, all of these charts look very similar, and the lines coming in together right around the 50 Fibonacci, things of that nature with the 200-day, all of these things are lining up quite nicely, which is something you don't often see. So, but we are getting a lot of these charts to look very similar. But I'm going to kind of hold off on any of these to really start making a decision. I don't think the market's really decided that this is a low or a high. I think right now it's kind of like what we've talked about, that rubber band starting to wind up, and it's going to snap in one direction or the other. That direction we don't know yet. So we've got to be very careful and vigilant with these different trades. But as you can see, overnight, E-mini S&Ps traded to the lows, but then on the open, and basically on Ballard's statement is, I think, the catalyst that really got this market moving higher. Kudlow and thing also came out and was talking about the tariffs not necessarily hurting the overall economic picture at this point anyway. So a lot of those different talking heads getting the markets to get a little bit of a pop. All right, a couple of things that I've done. Now, if you guys remember, with Gilead, let's start out with Intel. I don't know where my Intel chart is. With everything switched around, I'm a little bit discombobulated on my setup here without a couple extra screens. I'm a little cramped. All right, so Intel. On Tuesday, I talked about I was looking to cover Gilead on Tuesday. Well, throughout the day when the news came out, as you can see, on Monday, when the news came out that Apple said that by 2020 they were going to start building their own chips for their phones and different devices. That really hurt Intel. I don't think that Apple is going to be able to produce as good a quality chip as Intel. So I think that that's a little bit overdone, to be quite honest. You could probably cover your Intel if you waited till today, maybe even better than where I did. But I decided to go ahead and cover it when I saw that news. It's one of those things, you know, buy the rumor, sell the news kind of thing. Well, the news came out and I decided to get out of my trade. So in Intel, this was in my IRA, and I had on the April 54.60 call spread in there. I originally sold it for 40 cents. And I bought those back for 12 cents, and that was on, like I said, Monday. So wasn't really planning to cover that, but once the news came out and the market fell out of bed, I decided I had to cover that, and I got out for better than 50% of my max profit. I only got out of actually the 54 calls that I've short. Like I said, I was short the 54 along the 60s. I got out of the 54 calls. Still long those 60 calls. They're worth just a couple of pennies, not worth getting out of. So I just covered the other ones for the nice profit. And like I said, 12 cents. So I made about 28 cents on that trade. And then let's look at Boeing. Let's see if Boeing comes up. Yes, Boeing here. Now this I was able to cover for a little bit better than 50% of my max profit. This is in my margin account. I have BAN, which is Boeing, and I had on the April 375 calls in there that I sold for 53 cents, was able to buy them back for 21 cents, and I did that yesterday. So as you can see, today's move, you can probably get those a little bit better than where I even got out of them. So market has come off a little bit since where I traded out of those there. So and finally, I guess I got Intel last, so I will roll that over to Gilead, because Gilead I covered yesterday, and I did this both in my IRA and in my margin account. If you remember, over in my IRA, I had on the April 92.5 call spread in there. I originally sold it for 35 cents. I covered the 83 calls yesterday for 12 cents. So a nice little profit there. And in my margin account, I had only on the April 82 calls that I sold for 41 cents, bought those back for 12. So again, both of those trades, all three of them actually, the Intel, the Boeing, and the Gilead, probably could be covered a little bit better than where I did. I think I got good strike location on them, but like I said, it's not like you missed out on anything yesterday with my big snafu. So I think you guys are still okay there. I haven't added anything to my account because, like I said, I'm waiting to make sure we have a market move. I have kind of by covering all these short deltas, gotten a little bit delta long in my overall portfolio. Remember, I have on a straddle, I have a strangle. Actually, I have 2 strangles on in there. IBM, I'm going to have to be real diligent on it. I'm very close to having to roll down my calls, maybe turn it into a straddle to stay a little bit mechanical about that. So I'm keeping an eye on both of those. So BABA and IBM definitely are keeping an eye on those. So if the market starts turning around or starts looking a little bit bearish, I might just pull the ripcord on all my puts and just leave the calls, maybe even roll the calls down, cover the puts. I haven't really decided. I'm trying to stay on the sidelines right now, just make sure I get a definitive market move, which I don't think we've seen right now. The market's just jockeying back and forth. So I'm going to hold off. There's not too many days left in this. I'm going to hopefully get some theta decay going and be able to get out of these trades rather soon. All right, that's all I got for you today. Friday's webinar, though, is going to be on the Iron Condor. All right, so check that one out. It's actually the Iron Condor. So check that one out. It's going to be really good. I'm going to be able to talk about how you stay mechanical with these, kind of like what I was just talking about with the Boeing, BABA, those kind of trades, how you stay mechanical with those delta neutral or those market assumption neutral type strategies. All right, so check that out. I'm going to show you how to set that up. Yeah, I know you can go online and figure that out, how to do it, but they're not going to tell you the right strike locations to increase your probability of success, which I will. Also, finally, like or dislike at the bottom of this so that we know what we're doing right and what we're doing wrong. If you give me a dislike, just tell me why you don't like it, and maybe I can change some things up. Otherwise, I'm going to do the things the way that I look at it, but I might not necessarily meet your needs. So let me know what that is, and I'll try and approach that in these market commentaries. All right, so if you can't take that, take it easy.